We're excited to announce that insulin is free now. Those words weren't true, but they came from a Twitter account that looked like it was Eli Lilly's Twitter account. It was even verified, and they caused a loss of $22 billion, fortunately temporarily, just based on that news. And they caused, in fact, 12 of the 18 largest pharmaceutical companies in the world to stop advertising on Twitter as a side point. But the message is clear. The disinformation moves stock prices. In fact, my friend Alan Jagolinzer of Cambridge University thinks it could be the very biggest problem facing mankind today. And those are big words, considering we have global warming and who knows what else. So for this edition of The Early Advantage, we like to dive in to disinformation. The same technology that makes publishing more democratic, easier for everyone on the internet, also makes publishing fake news easier too. And this has lots of ramifications, but in the financial markets is certainly one of them. What does this mean for investors, for companies, for regulators? Let's talk about that today. My guests are Susan Shu, an academic from Boston College, and Austin Moss, also a professor from University of Colorado Boulder, who have both written research recently about disinformation. And by the way, I'm using the term disinformation to refer to information that's specifically directed at giving the wrong idea, as opposed to misinformation, which is a case where somebody is accidentally spreading something false. But generally speaking, in the stock market, we're dealing, if something is false, it's very frequently disinformation, because you have a motivated counterparty spreading that on the other end of the other end of the story, I should say. Okay, so let me start with you, Susan. And by the way, Susan looked at merger announcement news on Twitter and sort of fake rumors being spread. And Austin looked at earnings announcement or news that was published around earnings announcements on Seeking Alpha articles. I should say, not just news, on Seeking Alpha. So they both came at this topic from two different angles. So actually, before I start, welcome, guys. It's my pleasure to have you on The Early Advantage.
Thank you.
Thank you. Great to be here.
All right. So now with that long preamble of mine, I tend to go on monologues, right? I'm not supervised. I just tend to talk, right? So with that out of the way, let's get to the details. So Susan, you looked at and I'm reading my notes here, 304 merger rumors published on Twitter from 2009 to 2014. And you found that highly tweeted merger rumors were not more likely to be true. So there's not really a wisdom of the crowds effect, but they were more likely to be effective in moving the stock price. They worked. Abnormal returns, according to your research, for the fake rumor day were 7.57% positive. That's a big number for the highly tweeted fake rumors, if I'm understanding correctly, and 2.87 for the less tweeted ones. And you found that the price distortion lasts for 8 weeks. That's a lot longer than I would expect. Now, you did find that only 21% of the rumors were actually true. So, basically that's 1/5. So 4 out of 5 of them are fake. My first question for you, Susan, if I wanted to be a bad guy and make as much money by spreading fake merger rumors on Twitter as I possibly could, what's the most effective way for me to do that?
Yeah, so I can step back just a little bit. So we studied the effect of social media in spreading fake news, right? So fake news or like disinformation probably dates back to, I don't know, hundreds of years ago.
Or thousands of years even.
Yeah. Thousands of years. But I think it's just because, possibly because of the rise of social media, this concern for misinformation or disinformation has risen to a sort of a much higher level, I think. So we are studying how misinformation, disinformation on social media can distort prices. Right? So we did not study how the fake news came about. So it's really, the way I see it, social media can contribute to misinformation in two different ways. One is in the origination of the fake news, because it's a very easy place to just start rumor and for it to spread, right? Then there's another effect, which is just the spreading of the fake news or the disinformation, and that's the second one, that we were focused on is once you have merger rumors that surfaced in different places, including Seeking Alpha, or let's say New York Post, New York Times, Wall Street Journal, or Monthly Fools. So these are the different places these rumors could surface. Then oftentimes they will be discussed as anonymous. Anonymous sources told us that Microsoft might be acquiring Yelp. Right. So then what we were looking at is once that merger rumor surfaced, then investors or people start to tweet about these things. And we are trying to study whether there's a link between the tweet volume related to that rumor on the day the rumor surfaced and the eventual realization and the stock market reaction. So what we found, as James indicated, is that in fact that the tweet volume related to the rumor is not related to the eventual realization, right? And as James said, like the merger rumors are highly speculative. Only about 20% would turn out to be true, and 80% will be fake, will be untrue. So then the tweet volume does not indicate accuracy, yet tweet volume elicits greater market reaction. So investors behave as if the more highly tweeted rumors are more true, when in fact that's not the case, right? And so what we documented sort of a temporary overreaction to the rumors that being highly tweeted, and that distortion took like something like 8 weeks to revert back to normal. So clearly, if you were someone who's savvy about this, you would be able to use this.
Arbitrage that the other way, yeah.
Exactly. And then try to take advantage of this. But we did not study sort of the intentional creation of fake rumors or the fake news with the intention of distorting the stock prices. That's probably what that's more related to what Austin was studying.
Got it. So studying more the spreading of it, I think is the way you're saying it, versus like the from the beginning path of how can I be a bad guy and manipulate and whatnot. And basically what you found though is that essentially the more it spreads, the more effect it has on the stock price, which is in a way pretty straightforward and basically shows that there's not really a good mechanism for stopping this. Let me ask another question, Susan. And at first I thought this was small, but as I think about it, it's kind of interesting. Mm-hmm. You mentioned that there is already existing research showing that regular traditional media also tends to spread fake news rumors, mm-hmm. maybe not with malicious purpose, but they're also desperate for eyeballs. They're trying to spread stuff that's exciting, mm-hmm. new, interesting, and so mm-hmm. they just may inadvertently spread false rumors too. But that doesn't really have that much price impact, mm-hmm. Whereas the fake news spread over social media mm-hmm. has a surprising price impact. What do you think that means in terms of the I guess looking ahead, does it mean traditional media is dead? I mean, do investors just disregard it, not trust it? I mean, and they trust tweets from just some dude they followed a week ago. I mean, it just seems to be kind of surprising to me that's accurate. But I guess it points to the fact that social media seems to be more trusted and more powerful, at least by a subset of investors, than mainstream media with editors and staff.
Yeah, so that's something that we thought about a lot. But nowadays, I feel the line between traditional media and social media is increasingly blurred. For example, even Seeking Alpha, I should find that to be sort of like an interesting forum. That's where these two different medias probably, I don't know. I don't know how to classify Seeking Alpha because I feel it could be almost either way.
Yeah, you got random people and you've got like very professional accounts that have like, they're full hedge funds and they just happen to post some of their research on Seeking Alpha. So it's really really a mix.
And they also seems to be some verification process as well, right? So I feel like these, because the two are increasingly blurred, I feel like it's harder to really separate. Where is the distortion coming from? Is it purely media effect? Is purely social media effect? Because sometimes it's like the two interact. Another thing that I think the social media has done is it has distorted maybe the production function of the traditional media as well, making the traditional media, they race to produce stories or publish stories without going through the regular checks and balance of the verifications they used to
Yeah.
do, right? So I think that I almost feel like the rise of social media also has pushed media to maybe publish more disinformation in that competition for readers.
That's a great point. Traditional media has evolved very, very significantly and continue to evolve. I think because of the pressure of social media and just the economics of it are just set. I mean, that's separate from this discussion, but it's really. I mean, social media is killing traditional media, but at the same time, we desire the higher end social media. I feel so. So there's some type of fusion going on in the industry, and it'll be fascinating to see how this plays out with investors. So Austin, speaking of this, speaking of Seeking Alpha, you looked at Seeking Alpha articles and found that fake news increases around earnings announcements, specifically right before them, when everybody's excited, but there's they're just kind of waiting, nothing's happening yet, and also that firms with more credible and trusted accounting were less susceptible or less likely to be targeted by this disinformation. You also found that fake articles were least likely around accounting topics, which I guess makes logical sense because accounting is sort of a hard and fast numbery kind of a thing and harder to fudge. And is kind of like a little bit like what Susan found, I would say. Fake news, you found that from 2007, 2009, interest was especially high. In other words, when there's interest going on, when there's something happening, you tend to have probably more news overall, and you also tend to have more fake news. Like they know when to put out the articles. And having worked for Motley Fool for 12 years, like I know we would be very strategic about the timing of the articles and when you put it out and what's the shelf life going to be. So I wouldn't be surprised if the fake news people are just as sophisticated. Same question I first asked Susan, and I think she's right. Maybe your research relates more directly to it. What are the hallmarks of fake news or disinformation? If I wanted to be a bad guy on Seeking Alpha and publish some fake stuff, how would I best do it?
Yeah, that's a great question. So our paper broadly studies the content, timing, and the eventual targets of fake news. And if you were a bad actor trying to write the most effective fake news, we find that from a content perspective, you would write more towards, let's call them soft topics, or basically the opposite of accounting. So accounting, very hard numbers. It's hard to talk about a given EPS or whatever else in a fake way. But it's pretty easy to discuss an ongoing legal issue in a fake way. There's a lot of speculation that can be going on. And those are the type of topics that we find are most likely to be about fake news. So it's legal, and a lot of pharmaceutical, biotech stuff that's like in early stages tends to be on the fake side.
Yeah, that's very probabilistic at that stage. Yeah.
Yep. Because then you get just whatever you want to write about. It's kind of it's more of an opinion, I guess, rather than hard numbers. And then also upcoming capital raises. We were a little surprised, but like secondary offerings and debt offerings, companies that are kind of undergoing more capital raises also happen to have more fake news written about them. And then from timing perspective, definitely prior to earnings announcements, when there's the most uncertainty going on in a firm's information environment. And as you said, there is an increase in overall articles around earnings announcements, but actually the non-fake articles increases much more after earnings announcements. Whereas, as you mentioned, fake news occurs before these earnings announcements. So it's like kind of this bimodal distribution or double top distribution. So definitely prior to earnings announcements, and then target-wise, basically to combat fake news or for people to believe your writing, the fake writing that you're doing, they can't have a external source that they can fact check you against. And so writing fake news about companies that don't provide management guidance or disclose in a non-transparent, hard to understand way, it's easier for fake news writers to trick their readers if there's less quality, less reputable accounting information external to their articles.
And that makes sense. And it makes sense what you mentioned in the paper, that the right before the announcement is kind of the prime time, because after the announcement, then you've got some hard, real numbers. But right before, there's probably interest, there's excitement, and there's it's been a while since the last hard numbers. So the market is most ready to accept news of any kind, including fake news. And let me ask a question that I actually asked you on a webinar hosted by Alan a while ago. Some of the stuff may be posted by short sellers there are good short sellers, there are bad short sellers, and maybe some people just want to drive the stock price down, so they want to post fake news to do that. Now, short sellers, though, have a wonderful cleansing benefit on the market and have uncovered some of the biggest frauds. And in fact, they're very frequently the ones who uncover corporate fraud across the world. So they have a very good function. Are there any ways to know preemptively if a piece of news, and by the way, companies may strongly refute fake news, but a lot of the bad companies, if you look back in history, they also strongly refute the short seller reports. My question is there any way to know early on or in advance what's like legitimate fake news? It's an oxymoron, but what's truly fake news versus what's a legitimate short seller finding? Like, are there certain like telltale signs or indicators that are more likely to be used by publishers of truly fake news, if it were?
Yeah. So one, I guess this question is really interesting. And when you asked it a week or two ago, since then, I've actually looked into this setting and I'm thinking about how to research this further. But as of now, the best that I could say is that there are certain linguistic cues that people use when they're writing fake news or when they're writing, uneventful or untruthful news. And so just looking for cues that basically where the writer distances themselves from the news. So rather than giving specific details, you might talk about a long time ago rather than last quarter, or over the last 5 years instead of saying 2 years ago.
So vague wording, basically. Yeah.
Very vague wording. Yeah. I would say is kind of the best telltale sign as of this moment.
Interesting. And if you're looking into it, that's great. It sounds like, we might have some good research coming out about that soon. Let me, or at some point, let me step back, guys, though, and just look at this from the perspective, again, from an investor. If I'm a company, if I'm just somebody in this industry, it doesn't seem like this problem is going away. In fact, I would guess it's going to get worse. And there have been some efforts, like Twitter's blue check for verification, but that account I mentioned, the fake Eli Lilly account, was a blue check account, ironically. So that obviously was not a particularly effective way to stop this. Where do you guys see if it does get solved? I mean, maybe the problem doesn't get solved. Maybe it's just something the market has to deal with, just like, people have the flu every year. If it does get solved, if it does get lessened, do you think that's going to be because of AI on the private side, because of regulations, because of something else? What do you guys think in terms of solutions?
Yeah, I think that's really, really hard. Yeah, I don't know. I feel like maybe the government can step in, but how? Right? I don't know. AI on the private side. Maybe, but these things are so hard to detect. I don't know, right? It's so in our paper we found like the merger rumors, whether it's let's say more specific when they mention who might be acquiring who, so they have a lot of specifics, or they even mentioned the possible deal price. Does that make more likely? Does that make the rumor more likely to come true? We actually did not find that either. So it didn't even seem like, the more details, the more likely a rumor is going to be true, right? So then I actually felt like I've been thinking about this quite a bit. I actually am pretty pessimistic about, at least in the short run, we'll be able to find a solution for this problem.
Yeah, that sounds like a very valid idea. It's just more power has been given to the people to speak up thanks to technology and social media, and that's wonderful in many ways. But in many others like this, maybe it's not. Austin, what are your thoughts?
Yeah, so I think it's such a gray area, at least at this point in time, and fake news detection so early in its process that I think it would be, one, really hard for the government to come in and regulate this, and two, if they did come in and regulate this, they'd probably regulate it poorly. It's just my guess.
Decent chance of
And
that.
so, yeah, I think well, I'll say I think it's probably going to be up to these private corporations, such as Twitter, to come in and do what they can. And I actually think Twitter has one. Twitter has one new product called Community Notes, or it used to be called Birdwatch prior to Elon Musk's takeover. And it allows people to attach basically clarifying notes to tweets that are deemed misleading, or if they don't include, if they don't include all the facts, then the Community Notes allows basically another tweet to be attached to this other tweet that clarifies and adds, all the necessary context that's required to understand what is actually being said in this in a truthful way. And I think that's actually a really great step in this path, is outsourcing kind of this crowdsourced fake news detection.
That makes sense. Yeah. I mean, the problem was created by technology and will hopefully eventually be solved by technology. And I wouldn't totally knock regulators. And I say this from firsthand experience. I did business in China for about 10 years, and I had a company there, and we were the target at one point of fake news by this really kind of unhinged guy. And we sued him in two different cities, the largest law firm in China, and separately the top IP law firm in China. I mean, we put all the resources we had behind this, and we eventually won. But it took like 2 years. It was so slow to move through the courts, and they never really enforced anything. He never paid the fine. He just kind of disappeared. So in places, at least where there's a weak regulatory environment for enforcement, it's a lot easier. So if to the extent the U.S., the U.K., and Europe can have more strict punishment and strict enforcement, that's at least some deterrent, although maybe that just pushes the people who perpetrate fake news to overseas places where they won't be punished. I mean, kind of like what's happened with crypto, right? I mean, they go to these island nations, so who knows? But either way, I do hope we have some solution. I tend to agree with Susan's pessimism that I doubt we're going to totally solve this ever, but I think there is value to be added by solving it, because now when you inject fake news into a system, you lower the value, right? Now I have more uncertainty. Now I don't know what's, so that is a market value lowering variable. And the corollary then would be that values can be increased by addressing that. So my fingers are crossed, and I hope we can get there. Susan Shu, Austin Moss, guys, thank you very much for joining us. It's been very informative. This is a big problem. I agree very much with my colleague in Cambridge Allen, or my friend in Cambridge Allen, about the size of this. For investors, I think we're going to have more problems ahead, more bad news stories about people getting duped and losing money. But the good thing about a market is it self-corrects. Even if it takes 8 weeks, it does self-correct. So hopefully this happens without too much damage. Guys, thank you very much for joining us today. And as always, thanks to you guys for watching at home.